From the grit and the grind to successful minds. Live from the entertainment capital of the world. Your hosts, Jillian Batchelor and Daryl Hanna.
Hello, you guys. It is Jillian Batchelor and Daryl Hanna with Vegas Real Talk. And we are here again for our newest podcast episode. And we have a special guest today, do we not?
Yes, we do. The one and only
Jon Gedde. Woo! And Jon is with Simplifi Mortgage. Jon, tell us a little bit about yourself. Who are you? Why do we want you on our talk show today? And tell us what you're going to tell us.
I'm actually just some guy that you found on the street this afternoon.
Oh, and you were good looking. You were like, come on in.
We just ripped them off the street.
My name is Jon Gedde. I'm the founder and CEO of Simplifi Mortgage. I'm also the chairman of the Nevada Mortgage Lenders Association.
Wow.
And we handle advocacy for all mortgage lenders in the state of Nevada. So,
wow.
So you know what you're talking about.
He's a big deal.
I try.
Yeah, he's got the insider track on stuff.
And so, Daryl Hanna, why is it that we wanted Jon Gedde in our show today? Because what is happening in the real estate market in Las Vegas?
Well, what's the craziness, man?
The craziness is interest rates keep going up.
Yeah.
Interest rates, very, very scary.
Indeed. Yeah. In early January, the first week of January, we were looking at interest rates in the twos still for a 30-year fixed loan. We were talking about
mind-blowing.
2.875, 275, 299. Now we're talking about interest rates pretty solidly in the fours just a couple of months later.
Yeah, but here's the thing,
jump.
too. Like, for years, I've been doing videos talking about at some point, they're going to go up.
Yeah.
Right? So this isn't like, it's not
it shouldn't be
surprise.
Scary. Nope.
It should not be a surprise to anybody that's been paying attention. This is a long time in coming. In fact, I thought it was going to happen sooner.
So all we.
Yeah. And the interesting thing is that people have a misconception about interest rates being controlled by the Fed or the Federal Open Market Committee when they raise interest rates. Well, they haven't raised interest rates yet, and already mortgage rates are up more than 1%.
So it's not the Fed is not the one that's in charge of raising rates.
Correct.
Wait. So let's go back to that. Explain that. If I'm just a regular person on the street and I don't understand that, I need you to dive in a little bit deeper to that, Jon. Tell me, what does that mean? Because I now am confused because what you just said to me, I feel like, is the polar opposite of everything I've been taught. And let me just say before we even go there, the first interest rate I ever had on my very first mortgage was 8%, and I thought it was fantastic.
Well, yeah.
You guys, it was
Compared
amazing.
in the 80s,
I was
that
18.
Was really good.
Yeah, I think my parents had a loan on their house, and it was 16%, and that was pretty decent for the time.
Well, that was probably in the 80s, and I was born in 82, so we're not talking about that, but let's keep going. All right, Jon, so go back.
So it's not the Fed.
It's not the Fed. Explain it. Who is
It's not the Fed. So the Federal Reserve sets benchmark interest rates for certain things. The key component is what they call the federal funds rate. And all that is the rate that banks borrow money from the federal government overnight. That's it. That's the only thing that they really control in the market. Interest rates such as treasury rates, mortgage rates, and other rates are set by the open market. So when the Fed started talking about, hey, rates are going to have to go up, this inflation that we've been hearing is maybe transitory, not so transitory anymore, people start to demand higher interest rates when they're buying into bonds that are backed by mortgages, and that has driven rates considerably higher. Yesterday alone, we had a really big move in interest rates. So it's determined by the market's capacity and what they feel like buying on any given day. Do they want to buy stocks? Do they want to buy bonds?
So it's investor money.
It's investment money. Yes,
Yeah.
it's investment money.
So, Jon, okay, if I am a buyer and I'm out looking, and I've been looking for the last couple of weeks, what does last night's movement in the market mean to me? Can you just give me just an example? Let's say I'm a $500,000 buyer. I'm borrowing $400,000 on a house because I'm going to put my 20-ish% down. And what does that mean to me? What just happened?
Well, what happened is that you're going to pay more for that same house.
Shocker.
Yes.
Well, and your buying power is going to do what?
Yeah, either you're going to have to buy a cheaper house to keep your mortgage payment the same if your pre-approval was maxed out, or you're going to end up paying more for that house. Now, how much depends on exactly how much your situation changed, but let's say it's a 0.75% change on a $440,000 loan, $550,000 purchase price, 20% down. You're looking at about a $200 change in your mortgage payment.
Since last night?
Since Friday.
Wow.
Yeah.
Oh. Okay.
Yeah, big change, and it happens quickly sometimes. Not always this quickly. Usually it's a little more gradual, but yes, there was a big move yesterday.
Was there anything particular that made it such a big dramatic move overnight? Is there anything that they know happened or?
The speculation is that investors are feeling a little bit more confident that the situation in Ukraine is not going to be as bad as previously expected.
So hold on one second. Stop right there because we need to unpack that a little bit.
Yeah.
So the regular public would think if the situation is going to be worse, that interest rates might go down to spark
I would
buying?
think if the situation is going to get worse, you'd just think interest rates are going to get worse. And if they're better, how come they didn't go down?
But so now, so let's go back to that, explaining that. So now you think that if investors are thinking that the war in Ukraine may not be as bad as it is, the Fed, or what you were just explaining, it now felt confident to raise lending costs and rates?
So here's how it works. People invest with different levels of risk, and the more risky something is, the more return they expect. When people are confident that the market's going to do well, that everything's going to go well, they usually invest in equities, stocks, and therefore the stock market goes up. Usually the bond and stock market move inverse to one another. Stocks go up, bonds go down. What happened yesterday is that people are feeling confident that this isn't going to be a nuclear war. It's not going to be this crazy drawn out thing. So they are feeling a little bit more comfortable, and they are expecting a higher return on their money than they did the previous Friday.
Okay,
That's
so
about
hold
it.
on one second on that. Now, even before Ukraine, Russia, this whole issue that was happening, even before that, we've been projecting rates were going up for the
Rates
last
already
year.
started going up even before the war.
They did.
Yeah, absolutely.
Sure.
So let's not panic people and just think, because a lot of people are like, oh, should I wait to buy with this whole thing with Ukraine? Really, this
It
is
just
exactly
made it
what was
quicker,
expected
I
for
think.
the last year.
Yeah.
Yep. And a little bit more of a jump, maybe a faster jump than we expected in such a short period of time.
Yeah, really, it actually tracks pretty closely to the trend line
Yep.
that was happening before the Ukraine conflict started. And then there was a little bit of nervousness, and people fled to bonds a little bit. And what happened over the weekend is that they're feeling pretty confident that it's not as big of a deal. They don't need to worry about. So it basically went back to the trend line that was expected a couple of weeks before that.
Okay, so what I basically heard you say is don't panic, people. But
Don't panic.
on the real estate side, which Daryl and I want to go into right now, is that the time to buy was yesterday. But if you didn't buy yesterday, the time to buy is now. You should not wait. People say all the time, I'm going to wait for prices to come down. I'm going to wait for interest rates to come down. Well, that's probably not happening. Nobody has a crystal ball. Daryl, do you have a crystal ball?
I got my own little crystal ball. Yeah.
But
You guys,
do
no
we
one
think,
else can see it.
Daryl, Hanna, do we think prices are coming down? Daryl, Hanna, do we
No.
think that interest rates are coming down?
No.
Tell me more.
They're both going to go up. I mean, at the end of the day, I think that the craziness may slow down, meaning that we may not see 15, 20%, increase in prices every year.
Or we may, because we still are.
Who knows?
Right
We
now.
may. I don't know. Crazier things have happened. But, I mean, at the end of the day, prices are going up, interest rates are going up. So what does that mean? Today's the best time to buy.
So if I want to get into the market, I should buy now, because what you're
Yes.
telling me is it's just going to cost me more money to wait.
It is.
Okay, what if I have a house to sell?
It's kind of, it's a conundrum. It's a really good time to sell, but then the big question comes, where do I go?
Yeah.
So, at the end of the day, I think you can never judge the market at the very top. It's, people try to judge stock markets. They try to judge real estate markets. And, at the end of the day, when you try to judge it too perfectly, you usually end up losing.
Yeah.
So I think right now you're going to get a good amount for your home. And you can, if you're going to try to buy something new, obviously it's a good time to do that.
So before we kick that back to John, I have a couple of questions. Let's talk about the other things that are affecting our economic prices and everything right now. Let's talk inflation. Let's talk gas prices. I know John doesn't understand gas prices because he drives a Tesla, but for the rest of the world,
I wonder
that
why
actually,
you guys got to buy something.
right? Exactly. We're like, no, gas prices. We're going to let John roll us in the Tesla. So John, let's talk a little bit about where you think the mortgage market is going to go based on inflation, based on gas prices, based on what is happening. We talked a little bit about Ukraine. Tell us more, sir.
Yeah, thank you for the Tesla plug. Love Tesla. I think it cost me about 8 cents to drive down here instead of the $20 that it costs everybody else. I strongly believe that we are not done with interest rate increases. We are not done with inflation. I think the inflation is going to tame itself down through the rest of 2022, but we have a long way to go. The latest numbers were in the 8% range for consumer price index. Wow. Inflationary increases since 2021. That's a huge number. We've always been trying to get to 2 and haven't been able to do it. Now we're at 8. So the market's too hot, the economy's too hot. Some of that is supply chain issues that will work themselves out. Some of that is transitory and will go away. And a lot of it is in supply chain issues like computer chips for cars, for example. The price of used cars is through the roof. The price of gasoline is through the roof. But the overall economy is still doing really well. And because of that, we're going to see more price increases, more interest rate increases to try to tamp that down a little bit. I fully expect that interest rates by the end of the year are going to be significantly higher than they are now.
Yeah.
And because of that, that means the best time to buy was yesterday. The second best time to buy is today.
So let's talk a little bit about our city in particular. So we know gas prices are up, which is fuel. Fuel, obviously, we're entertainment capital of the world. People are coming in, about 50 million visitors a year coming into Las Vegas. Conventions are just starting to pick back up. The city is open. The city is booming. Casinos are projecting and receiving the highest gains on gambling, on entertainment that they have seen in like 15, 20 years.
Yeah.
So where do we think, Daryl, let me ask you that. Where do you think is going to happen to our city with our entertainment capital of the world? We're seeing more concerts. We're seeing more events.
Yeah, I think
is fuel going to stop that?
No, fuel's not going to stop that. I mean,
people are still going to travel.
There's a lot of pent up frustration over the last couple of years.
A lot of
pent
up demand,
and I don't think higher gas prices are going to keep people from coming to Vegas. I mean,
well, for that example, I was telling John the other night at dinner. I was saying I actually heard my passport crying in the safe. My passport was saying, "Jillian, please travel. Jillian, please get on a plane."
Yeah.
So, like you said, pent up frustration. They want to travel.
No, and Vegas has been shut down pretty much for the last couple of years, and now it's open, and we're seeing the trade shows starting to come back, and I think this town's set to blow up. I mean, a lot of people have been talking about 2021 was our big boom year, and I was like, well, obviously 21 was a great year, but I think our biggest years are ahead of us.
And John, I know you get out a lot in this city, and you have seen just restaurants are just filled to the capacity. I mean, every single night, restaurants are booming.
You can't get a reservation.
I mean, literally, we try to go places, and we're trying to get out there, right, John?
Absolutely, yeah. It's hard to get a table places. It's hard to get tickets for events. It's hard to do a lot right now because there's so much demand.
And I love when I see, like, there was the hockey game, at the same time the hockey game, there's 3 different concerts going on. There's fights going on in Vegas. There's, I mean, like UFC fights, you guys, not like people fighting in the bar. And so we see all this entertainment happening. I mean, just the other night, you had some buddies in town, right? And they were here for the 400, and the 400 was crazy packed, right? I mean, the Golden Nugget was, like, filled to the brim.
Oh, yeah.
That's right. The Golden Nugget was absolutely packed. The Mid 400, I think they had their biggest turnout ever.
Wow.
For the Mid 400 this year.
I hear things like that. Biggest turnout ever.
Yep.
Yeah,
all the records all over the place.
All the boxing matches are filled out. Vegas Golden Knights. I mean, it's just crazy. So I love seeing our city coming back.
Yeah. Well, you see, they just broke ground on the new Station Casino over off of
we saw it on the way here
in Durango.
Yep.
Then you've got the new UNLV Innovation Center going in, which is nuts. Which I'm trying to set up an appointment for our team to go do the tour for that. But have you heard about that?
I haven't actually.
UNLV Innovation Center.
Tell me about that.
It's like $1 billion. Part of UNLV that's right over there by IKEA, and the first part of it is $1 billion, and it's basically they are teaching students for hotel casinos of the future.
Wow.
They've got like 4 hotel innovations that they've built that they're testing, different rooms and different technology in the rooms.
Oh, very cool.
Different games for the casino floor, different ways to do craps in 21 and all that. I mean, it's like this guy was explaining it to me when I just went to a luncheon the other day. And you can do tours and go tour the Innovation Center.
Wow.
And he just said it'll blow your mind what they see the future of the Strip.
Well, and speaking of that, so we have a girlfriend who works over at Switch, and she was saying they keep building larger, Switch is housing data for the largest data housing on the West Coast. And they just keep building more and more space to house this data.
Well, they just built that whole new.
Yeah, and she said they're already 50% sold out of that.
Yeah,
it's not barely even opening, and they're doing another one. So, I mean, seeing the growth of this city is just amazing.
Yeah, it's coming.
So let's kick it back to the mortgage market, real estate market, everything that's happening in Las Vegas. And we know, Daryl, you and I know, it is hard in this market with limited inventory. We have less than 2,000 homes on the market, that it's hard to get an offer accepted. Every house has multiple offers, many multiple offers. One of the things that we're seeing that are becoming a big issue, obviously, as we've seen for a while now, is appraisal gaps. We're also seeing that sellers and listing agents are not wanting to accept offers if the buyer is financed with an out-of-state lender. And you hear these big jingles all over, TV and commercials. And you hear these out-of-state lenders, this big lender, and they can finance you, and that's great. Why is it, Daryl? I'm going to get your opinion, and then I'm going to kick it over to John and get his opinion. Why is it that you think that a seller is less likely to accept a pre-approval from either a large national bank or an out-of-state lender? What's your opinion, sir?
Well, I think it's pretty simple. I think, and I've witnessed this myself as a listing agent. I don't typically like dealing with out-of-state lenders either.
Why?
Just because
Tell me why.
they just don't have a foothold on our economy and our city. And if anything,
Ding, ding,
if
ding,
there's
ding,
a
ding.
question that you need to go talk to an underwriter or whatever that's in Chicago or wherever they're at, like they're just out of touch with what's happening here.
Yes.
And typically takes a long time to get a decision, where if you use a lender that's here, like I can go to you and you can go to you're here.
You can go to your underwriter, you can go to your processor,
boom,
get me an answer right away.
Come back right away.
Versus going to a national processing center. John, what can you add on that?
Yeah, I mean, earlier in my career, I worked for a company that was based out of Colorado. Colorado has very high average credit scores. Their employment sector is the majority of it is W-2, traditional employment. We're here in Vegas, we have all kinds of different employment types. We have lots of people that work in hospitality and leisure. They have tip compliance, which is some things which doesn't exist in a lot of other parts of the country. They have lots of wage earners that have unique pay structures. We have lots of gig workers. We have lots of 1099 people, self-employed people.
People working out of their garage, like second jobs and stuff like that.
Absolutely, absolutely. If you're not familiar how to structure that file, how to underwrite that file, you can have challenges later in the loan process.
Which people in Colorado or Florida or Chicago wouldn't know how to handle a lot of that stuff, right?
If you're not used to that.
If you're an underwriter and you've been working in Nebraska your entire career, you're not used to looking at pay stubs and
tip
compliance issues that are super common here in Las Vegas. So it does help to have somebody that's local that understands the market.
Because John, I have had, and I know Daryl has had as well, and our entire team, we have had clients, either when we're the listing agent or the buyer's agent, be denied their loan with the big national lender saying, I can't do it. It doesn't fit our, A paper that it needs to be in. But when you're able to broker it, we've had you be able to come in and save the deal, and other local lenders be able to come in and save the deals immediately, be able to broker it to somebody and close it when somebody else was denied, and sometimes even get the client a better interest rate and even better closing costs, correct?
Yeah, absolutely. We do it all the time. One of the most common calls I get is, hey, John, the client insisted on going with XYZ lender, and now they can't close. Can you bail me out? And most of the time we can because they simply aren't looking at the package right.
Well, and that's if we even get that far into the process. What I'm talking about right now, too, is even step one. We're submitting the offer, and or other agents are submitting the offers to us. There's 26 offers on the table. They look at it, and there are a lot of agents and a lot of sellers out there that are just going to kick the offer away immediately because it's not a local lender. They're worried about the appraisal. They're worried about the issues. They're worried about not being able to reach the lender. There's a time change. There's this, there's that. And just by submitting with a local lender, and a lot of times those listing agents will pick up the phone. I know I will. I know you will. We'll call the lender before we even have our clients accept an offer. And we'll say, has this client been underwritten? Tell me what you know. And if you don't know that client by first name basis, or you don't know what's going on with the file, or they can't reach you, they're going to simply go on to the next.
I've never even met with them yet.
Yeah, and so we might not even get the offer accepted, right, Daryl?
Yeah.
So it's so imperative for you guys out there. If you're a realtor listening to this, use a local lender. If you want to give John a call, that'd be great. And if you're a buyer out there, know that it can make the difference of getting your offer accepted or not. Literally, the lender that you are using can make all the difference.
Yeah, another big thing that we haven't mentioned too with using an out-of-state lender is their appraisals.
Yeah.
I've had it where just forget it. If you've got an appraisal with an out-of-state lender, you basically have no chance.
Well, because they just don't understand the market. A lot of these lenders are saying, no, you have to go back 6 months in looking at the comps, which is traditionally the way we would do it. But the way that our market moves so quickly, in 6 months, the house could have appreciated 10%.
Well, also
10%
Vegas,
out of $500,000 house is $50,000.
I've had an argument where it's like, you've got a $1.6 million house here, but right across the street is a $450,000 house.
That's Summerlin.
Which doesn't really happen that often in other parts of the country. And you talk to these people and they're just like, what are you talking about? When you try to argue, they just don't understand.
That's absolutely right.
Yeah.
And some of the new underwriting guidelines, Freddie Mac, who is a huge aggregator of mortgages, they've come out with new guidelines that allow for desktop appraisals on a lot of properties. Well, the desktop appraisal might be sitting in North Carolina and have no idea that if you go across Jones or whatever the street is, the other side of that intersection, It's a completely
Just
different
changes
neighborhood.
the
They
world,
might not know the neighborhood well enough. So using a local lender, making sure that the appraisers are super familiar with the area makes a big difference.
Big difference, yeah.
I mean, because it really comes down to your team. When you're a buyer in this market, and even when you're a seller, but let's talk about buyer for a second. It is about the team that is working for you. It is about the realtor. It is about the lender. It is about the lender being able to select good appraisal management groups. It is about the title company being on top of it. It is about being a partnership. At the end of the day, we are all working together for a common goal. We have a buyer who wants a house. We have a seller who wants to sell the house. They've now negotiated and agreed upon a price. And how do we get that to close?
Yeah.
And we have seen it happen many times, way too often, where it just doesn't close because the people are not working together as a team. So you have to have a good team. And if you're a seller, you need to make sure that your listing agent is educated on all of this. There is a big national bank that owns an appraisal management group that traditionally their appraisals always, even before this market, came in low. They were always light because they are extremely conservative. So I know just through experience, when I got offers on my listings with that big bank,
yeah.
I would say, okay, Mr. Seller, we just need to know that 9 times out of 10, your appraisal is going to come in low.
you have to
Now, in a
guarantee.
market like today, it's even crazier.
Yeah.
And why would you want to risk that? When you have 26 offers on the table, don't risk it. Know your team. Make sure your team is educated and they know what they're doing.
Amen.
Yeah.
So, John, tell me why Simplifi Mortgage? What's about the name? Tell me, what should I know about that?
Well, Simplifi is evolved from my experience in working for various lenders over my 16-year career, that the process was never geared towards making it easy as possible for the client. It was always about regulations or doing it a certain way because they've always done it that way. It's never been about pushing the envelope forward and making it simpler for the client, hence the name Simplifi Mortgage.
That's business, right? I mean,
Right.
in this day and age, it is
Absolutely.
about how
It needs to be
easy-
streamlined.
Yep.
Yeah, I mean, look at, we can order food from the couch. It
Yep.
just takes 2, buttons.
Right.
But if you could
Absolutely.
figure out a way to do that with mortgage,
Yeah, absolutely.
right,
Absolutely.
just simplify it.
Yep.
Yeah.
So we have done a lot of things to make the process easier. We can verify income and assets without the borrower providing pay stubs, W-2s, bank statements, all those things. We can do that without them sending that stuff to us.
Wow.
I love that.
So we
That's
make the
awesome.
process as simple as we can for the client. Now, it's still a mortgage. There's still some paperwork involved.
You're going to need paperwork. What, you guys? We
Yeah,
need to
you
verify
actually
income
have to put a little bit of effort
and
in.
verify tax returns? I am shocked.
Yep. There are
John,
times
But you
we
know what
need tax
everyone wants
returns.
to know? What's the biggest the difference between now and back in 2000, before the
Why we
the
won't
last-
have a mortgage market
Yeah, why are we
meltdown.
not going to have this big bubble?
Oh,
Well,
that's
why.
Yeah, that is why. In 2008, when we were looking, or excuse me, 2006, when we were looking at sky high prices, it literally took nothing to get a mortgage. If you had a heartbeat and a
should've
credit
bought couple
score,
houses with no heartbeat.
if you had a heartbeat and a credit score that wasn't totally garbage, you could buy a house with no money down. That is not the case anymore.
Yep.
We're going to verify. You could state your income. You could say, "Oh, my
Which
income
is
my
crazy.
income is
That's-
Right.
$100,000." When you're making $5 an
People
hour.
working at McDonald's were buying $800,000.
Well, they were
houses,
and there was a lot of
Absolutely.
no income, no asset loans, Nina loans.
Correct. Yep.
That's insane.
There was negative amortization
No wonder
loans,
it
meaning
fell apart.
your balance goes up every month, starting at 95% of the purchase price.
Yeah.
It was crazy. There were loan products that existed then that do not exist now, and they will not make any sort of significant comeback. There's
Well, this
federal
is why
laws against
this is
it.
a really, I know we're joking, but this is a really important point here because everyone asks me, well, house prices are high again and people can't afford them. No, the difference is people can afford them. They are
Yeah.
fully documented loans. We're keeping their debt to income ratio at max under 50%.
And
A lot of
them
times
are
under
paying-
40%.
And a lot of them are all cash.
Yeah, we're in huge down payments. You guys, that's the major difference in this market today. Huge down payments, fully documented loans, never more than 50% of their debt to income ratio at worst. Honestly, it's a lot of times 40%. We have a lot of clients going in at 30%, which means you can definitely afford this house. And huge equity positions and the mortgage market is continuously going up. The equity positions are continuously going up. So we're definitely in a completely different market. I was here, John was here, Daryl was here than we were in 2008 to 2012 when the market crashed.
Yeah.
Totally different. And there's federal laws to make sure we don't end up back in that same position. One of them is called the ability to repay rule, meaning every lender that gives a loan to anybody for a primary residence has to document that person or people have the ability to repay the loan. And it's up to the lender to do that. If you don't, you're going to get in trouble with Uncle Sam. You're going to be looking for a new job very soon.
Wow.
Yeah.
So let's change it up a little bit. Let's make this a little bit interesting because if anyone's listening and they're out of state because this gets posted everywhere and they want to know, What is your favorite thing about Las Vegas? The other day I asked John, I go, John, what's a perfect Saturday to you? John, tell me one of your favorite activities in Las Vegas.
Favorite activity in Las Vegas? Well, one of the things that I love doing, especially in the summertime, is going out to Lake Mead.
Lake Mead, how far is Lake Mead from the Strip, let's say?
Lake Mead's about 45 minutes from the Strip.
Okay. And what can you do there? Tell me a little bit about it.
There's boating is my favorite activity, but there's all kinds of water-based activities out at Lake Mead. Jet skiing. There are places to fish and scuba dive and camp. Amazing recreation area.
So let me tell people a little bit about Lake Mead as well, because I love Lake Mead. My family goes out there in boats, and we water ski, and we tube, and jet ski, and everything. Lake Mead is the largest man-made body of water west of the Mississippi. There's also parts of Lake Mead that are over 1,200 feet deep. Hoover Dam is part of Lake Mead. Lake Mead actually goes into 3 different states. Lake Mead is huge. When you're out there, even I have a 25-foot boat, it is like you are in the ocean. Okay, it is ginormous, you guys. So a lot of people don't know that we have a lake that is that big, largest man-made body of water west of the Mississippi, you
Well, and
guys.
if you live in certain parts of Henderson, you're only about 20 minutes away from the lake.
That's right.
So you can be pretty close.
So, John, you're from the Midwest. I want to also know, now that's summertime. We talked about summertime. What about during the winter? What would you do in Las Vegas during the winter? Give me some activities.
Wintertime, I'm a big skier. I grew up skiing. I started skiing when I was 5 years old.
Snowboarding?
Skier, huh? By the time snowboarding became a thing, I was born in 81. By the time snowboarding was a thing, I was so good at skiing that I didn't want to give that up. It was like, do I want to start over? And
Wait, but
the
John,
answer
we're
was
in
no.
the desert, so where would you ski in Las Vegas?
Well, Mount Charleston, believe it or not, is 11,000 feet, and it's only about 45 minutes from Las Vegas. And they have...
And there's houses there that are 20 minutes away, 30 minutes.
There are houses there that are
it's
20,
crazy.
30
Jillian
minutes
Batchelor
away.
lives 20 minutes away.
Absolutely. And there's a ski resort there, and it's open all winter long.
So you can ski, you can snowboard, you can tube, you can go to the lodge, you can sip hot cocoa, you can have hot cocoa spiked if you want. That's an availability. So, Daryl, Hanna, if you're not skiing, you're not snowboarding, you're not jet skiing, you're not on the lake, give me some activities that Daryl Hanna likes to do in Las Vegas round year.
Oh, golf. I'm a big golfer. So there's a lot of golf here.
It's Tiger Woods right here.
Tons
next to
of
you.
golf courses.
What else
here.
do you do? What do you do with your son? What do you enjoy the most in Las Vegas?
Well, we're a hockey family.
Hockey.
So big hockey family. So do a lot of, obviously my son plays on the travel team for the Junior Vegas Knights.
Wait, and I just heard a little rumor that you might be being a hockey player here shortly. Tell us about that.
I am learning to skate.
What?
Hey,
Yeah,
all
man.
right.
Yeah.
Attaboy.
Scary learning how to ice skate when you're 49. You feel like you're going to kill
49,
yourself.
but dang good looking.
I'm doing it. I'm learning to
Good
skate
for you, man.
because I want to
Good
be
for
out
you.
there with my son. But hockey's amazing. Golf is amazing. I mean, Vegas has really become, because we got football, we have the new baseball field that was built for the
Aviators.
The Aviators. They used to be the Area 51s, but
Yeah.
but then they're getting ready to build Major League Baseball stadium here at some point.
Yep.
So that's next, and then also NBA will come. The T-Mobile has NBA locker rooms as well.
Yeah.
As hockey. So yeah.
And all kinds of entertainment, as we talked about. And you know me, I'm a foodie. I love to eat.
Oh my God.
So
Food for
the best
days.
restaurants in the entire world, of course I'm biased, but best restaurants in the entire world in Las Vegas. Lots of concerts, lots of entertainment, lots of things to do. But also just even if you're a family, parks, playgrounds, water parks in Las Vegas. I mean, this is the place to live. Of course I'm biased, you guys, but you want to live in Las Vegas. I promise you do.
Yeah.
Absolutely. Yeah. And the entertainment is a great example, but it's not just world-class entertainment on the Strip. There's world-class entertainment and restaurants throughout the city. And that's
true.
something I don't think people understand. If they're not from here, they've only spent time on the Strip or downtown. The entire city is packed with amazing restaurants and entertainment options.
Yeah, there's new pockets all over Vegas. You got
downtown
Town Square, you've got downtown Summerlin, you've got the District, you've got all these places that have these amazing restaurants.
Yep.
Yeah.
And so to make the entire city and all you people out there aware of what Las Vegas has to offer, the Batchelor Hanna Group is doing a video called Why I Like to Live in Las Vegas, what I love about Las Vegas, and we're going to get that out there for you guys so you can see all the wonderful things that Las Vegas has to offer because there's a plethora.
There is a plethora. You're going to see all of it in that video.
So before we sign off, this was an amazing podcast. I loved it. Hopefully you all learned something out there. John, is there any little key words of wisdom that you would like to give us?
If you're looking to buy in Las Vegas, today is the day. Do it
Today is
now.
the day.
Don't wait. You're going to end up paying a lot more for the same house if you continue to wait.
And buy investment property. Tell your mom, your brother, your sister, your hairstylist, your dog groomer to buy a house right now today.
And if you're a seller and you haven't checked the value of your home, it's probably worth a lot more than you think.
About 25% more than you think, I guarantee you.
Give us a call and we'll be able to tell you exactly what it'll sell for.
So you guys, this was great. Again, Jillian Batchelor here and Daryl Hanna with Vegas Real Talk. And again, we have Jon Gedde with Simplifi Mortgage. We appreciate you guys listening today. We appreciate you guys being here with us. If you would like to learn more about Las Vegas, reach out. And hey, we'll see you next week on Vegas Real Talk.
See you later.
Bye.